Hey, this is Mike Hambright with FlipNerd.com, back for another Flip Nerd VIP interview show. Today my guest is Nav Athwal, who is the CEO and founder of RealtyShares.com. RealtyShares is a crowdsourcing or crowdfunding platform specifically for real estate investors. It's an exciting space right now, a lot of talk about crowdfunding for real estate investing, and obviously a lot of real estate investors are always looking for new ways to raise capital to run their business. Before we get started with our interview today, let's take a second to recognize our sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. So Nav, welcome to the show.
Thanks so much for having me, Mike. It's a pleasure to be here.
Good to have you. A hot topic right now is crowdsourcing specifically for real estate investors, and so you seem to be in an exciting space right now.
No, it is very exciting. It's a very new industry, and we're very happy to be pioneers in the real estate vertical.
Yeah, I'd say the biggest issue that real estate investors face really is there's a lot of issues we face, but the two main issues are finding deals and financing them. So you seem to be in a great position if you guys can grow this thing.
No, yeah, there's definitely demand. We have a two-sided marketplace. We help investors put money into real estate, and we help those looking for good deals raise capital, and it's pretty hot on both sides. So there's definitely demand there.
Great. Well, before we talk a lot about your company, why don't you tell us a little bit about your background? How did you get started, and kind of what brought you up to this point?
No, yeah, great. So before I founded RealtyShares, I actually worked as a real estate attorney for 3.5 years. I was in San Francisco, worked for a pretty big law firm, represented some really big international clients, including Archstone, Avalon Bay, some big apartment developers, Related America, and really helped them get approvals and entitlements for some of their larger projects in the Bay Area, including a 600-unit mixed-use apartment building, as well as a few other 300-400-unit buildings. So that's kind of what I did right before RealtyShares. Represented these big clients on big real estate deals, and then before that, I actually was a real estate broker. So I helped close transactions. So I kind of went from helping people buy homes and small office buildings to helping billion-dollar corporations get major entitlements for big projects in and around the Bay Area.
Okay. And I have some friends that know some other folks that have been in positions where they're raising money for large international firms or huge funds to buy properties. And I assume in all of that you were doing, you started to recognize that, hey, maybe there's a bigger opportunity for me here, or a way to seeing that when you start to learn the ropes of how to raise money. I assume that something ticked off in your head there and got the wheels turning.
Yeah, no, I decided to quit my 6-figure job to focus on eating ramen and building a company. Yeah. And one of the reasons is exactly what you said is, when you're working so close to the industry, you realize that there is this access issue, that, these big institutional clients are coming into these deals, but if you're an average investor, you want to put money into real estate, you have very few ways to do so. You could invest in a REIT, but beyond that, you really need to have a network that's that's involved in real estate to be able to access good deals. And so, I would talk to coworkers who were investing in stocks and bonds and mutual funds through the 401k, and were kind of tired of the volatility and knew I was involved in real estate on the side, and asked, hey, how are you doing it? And can I get involved? I only have $10,000 though. I don't have $100,000 or $200,000. And the answer was, sorry, that's not, 10,000 isn't enough. So
right, yeah. So now with your company, you are focused on helping. Is it primarily residential or bigger commercial and multifamily as well, or?
Yeah, we do it all. So we've
Okay.
done residential. We've also done apartments in Dallas,
All right.
neck of the woods. We're working on some retail properties. So, really anything that there's appetite for.
Okay. Okay. So talk a little bit about, I guess you kind of run two fronts. You help investors find money, find partnerships with people that want to do deals, and you help investors that have deals find money. Are those the two fronts you work?
Exactly.
Okay. Okay. So tell us a little bit about, I guess if we start with investors that are looking to raise money to do deals that they find. Why don't you tell us a little bit about how the process works and how you benefit them?
No, great. If you go to our website, there's a different sign up process, depending on whether you're looking for investing in real estate or raising capital.
Okay.
So on the sponsor side, we call those looking to raise capital sponsors, since they're sponsoring the deal. There's a different investment flow. Basically involves them creating an account and filling out a short application, telling us what they want to raise capital for, what their past experience is, why they think they're suitable to raise the capital. And then we start a pretty, I would say, strong vetting process at that time, where we want to ensure that the person that's raising capital to our site really knows what they're doing. It's not just a first-time investor who decided they want to quit their job and focus on single-family home flips in Florida. It's someone that's done this, has a track record, has a pedigree, and that we think we can trust to raise capital through the site. So as a result, over the last few weeks and months, we've been getting 10 to 12 applications per week. So, there's a lot of momentum on that side of the marketplace. And we've probably been accepting one of the 12 per week. So it's a pretty conservative underwriting process. And we just do that to ensure high quality, because we don't want just anyone raising capital to the site.
Right.
So within 24 hours of the sponsor submitting the application, sometimes 48 hours, depending on backlog, we'll usually get back to them either with hey, this looks good, I want more information, or hey, sorry, at this time we just can't accept the application. And that's an automated process, and that's pretty much it. And once they're approved to list, then we help them create a deal page on our site. We pretty much do all the work, help them raise capital pretty much on a hands-off basis. They're really not doing anything but making the deal details available to us, so our investors know what they're getting into. And that's it. It's a pretty easy process
So once they're a sponsor, that just gets them in the door to present deals then, I assume. So you don't become a sponsor at the time necessarily that you have a deal. It's just, I want to use your platform to help me raise money for future deals. And then as deals come along, they build out a deal page that you could go present to your money folks. Does that sound right?
Yeah, we get both. Sometimes we get sponsors saying, hey, I don't have a specific deal, but I want to be ready to go when I do.
Right.
Sometimes we have a sponsor that says, hey, I need to close this deal in 3 weeks.
Right.
And my background, what do you think? And we definitely will entertain either. It just depends on really their background in the deal.
Okay. But once they're set up as a sponsor, the process, I assume, is easier to bring additional deals, incremental deals your way.
Yeah, the process is not only simpler, also quicker.
Yeah.
Because we have two levels of checks. We have sponsor level checks and deal level checks. On the sponsor level, we do a background and credit check on each sponsor just to make sure there's no history of any sort of crimes or bankruptcies or foreclosures. Right. And then once they're approved on that side of the coin, approved as sponsors, then the next time around, the only thing we're really going to have to vet is the deal.
Okay.
Get them personally. So.
Okay. And then how about I want to stick with this side of the deal, the sponsor side. Tell me how it works when somebody needs to do a repair draw. So obviously, in the business that I'm in, sometimes the repairs on a house are more than the cost of the acquisition of the house. Of course, that depends on what market you're in and the size of the houses in terms of total dollars. But talk a little bit about how repair draws work.
Yeah, so a lot of our sponsors are in the rehab business. So they'll buy a home for, let's say, $30,000, have to put in another $30,000 of rehab money. So because we're a pretty small company, we've kind of started to figure out more creative ways to do it than having to actually monitor the repairs and monitor repair draws. So what we've created is a system where we just ask them. We'll end up to, let's say, 80% or 90% of costs. including repair and purchase price. But we'll ask that the sponsor put up cross collateral just for the repair during the repair duration, and then we'll release the cross collateral. That way, we don't have to monitor the repair draws and really, make the funds available after certain milestones. We just say, hey, there's a lien on the subject property, a lien on a free and clear property, and we'll release the lien on the free and clear as soon as the repairs are done, and we verified that. Okay. So because our team's small, because we don't have the infrastructure, and because we're doing deals nationally, we've already done deals in 6 states. We thought that was a more innovative way to approach it. And if the sponsor just doesn't have another property, then what we'll do is, we can do a repair draw. And in that case, what we do is we'll hold some of the money in escrow for the repair work and they hit certain milestones. And those are decided based on mutual negotiations.
Okay. And how about the initial deal, the acquisition? Do you have appraisals done, or what do you do to protect the investor side of the deal, the money side, that is?
In most cases, an appraisal, an ARV appraisal, but in some cases, a BPO will work as well. So it just depends on the circumstances of the sponsor and their track record. If they've done 100 homes in a specific market, then a BPO sometimes will be fine because we have enough trust in them and their ability. In other cases, we'll go and get an appraisal. We definitely require some sort of valuation statement.
Right.
BPO work in some cases as well.
Okay. And then moving over to the other side, the money side of the business, you referred to the actual investors bringing deals as sponsors. What's the other side? What do you call the other side?
Investors.
What? Say that again?
We just call them investors.
Okay. All right. So the investor side. So what does that investor typically look like? Is it somebody that has access to a lot of money, or somebody that has a little bit of money but just not the ability to do deals themselves, or probably a little bit of both, I assume?
So one thing really quickly right off the bat is, our industry is pretty highly regulated by the SEC, the Securities and Exchange Commission.
Right.
Because we structure these as we structure them as limited liability companies, and investors buy shares in these companies. So because of that, we're in the business of helping the offer and sale of securities. Okay. And because we are in that business, we are today, unfortunately, forced to only be limited to accredited investors. So accredited investors are defined as investors that are making at least $200,000 or more a year, $300,000 or more with their spouse, or having a net worth of $1 million or more, excluding their personal residence. I see. If you don't meet those criteria, unfortunately today you can't use our site to actually invest. There is some very, I won't get into the details here, but there is some pretty monumental legislation coming down. Legislation's already come down. There's some pretty great rules coming down from the SEC, probably in spring of 2014, that could change that for the first time since the Great Depression. But at the moment, that's kind of one of our limitations, a forced limitation more than something we've actually come up with on our own. Okay. But within that range of accredited investors, and you don't have to be rich to be accredited. You just $200,000. A lot of big city lawyers and accountants make that. But within that, we do have a range of investors. And when I say a range, I mean everyone from a retiree to an engineer at Facebook or Google to a doctor, a lawyer, an accountant. We also have self-directed IRA investors that use Entrust or Kingdom Trust to invest through their IRA and get tax savings that way. And we are opening our doors this month to global international investors as well, since they're not subject to the same domestic-based securities laws.
Okay. So you find investors, and how are deals presented to them in terms of available deals that come along?
Yeah. So I wish I could give you a demo, but it's very. So what they do is once they come on our site during the sign-up process, we verify that they're accredited. Once we verify that, they're basically given access to a deal browse page where they can basically browse a number of deals and consort those deals by hold period or location or type of property. Right. They see something they like, they click a button that just says more info, and then when they click more info, we give them a very detailed but not too cumbersome deal page. And that deal page includes things like what are the property details, when was it constructed, what was the purchase price, what's the rehab scope of work, Who are the borrowers? What's their background, or the sponsors? What the appraisal and other deal-related documents are made available to them, and basically the investment, kind of the purpose of the investment is made clear. So this deal page pretty much gives them everything they need to know. And what we'll do sometimes is we'll get a lot of really great questions. We have some pretty smart investors. Mm-hmm. And what we'll do is we'll subsequently create a frequently asked questions tab on that same deal page, where if anything wasn't addressed in the initial cut, will be addressed on that FAQ. And we've found investors are pretty satisfied with those deal pages, and they think they're getting what they need to make a informed decision.
Okay. And in terms of, I guess not only the deals you've done so far, but the deals that you anticipate doing, obviously you're in growth mode here. Do you anticipate that most of those will be, in my business, I know we primarily are, other than when we assign or wholesale properties, we generally don't need capital for that. But for rehabbing properties, we do, and for keeping properties long-term as rentals. So do you find that the need so far, or what do you see the demand coming for? I know you do them for short-term, flips, or an investor's gonna rehab a house and turn it around and sell it. How about longer-term financing for rental properties? Are you seeing much activity there?
We are. We pretty much see everything in the kitchen sink. We have probably, I would say, 20% of the applications we get are for investors that are buying residential properties for buy and hold because they don't flip market in their specific geography makes sense anymore, either because they've been outpriced and by institutions, and so they've had to move their price point up, or because they just think the cash flow is so darn good, why sell it? Why not just hold it and really get a mid-teens cash flow return?
Right. Okay. Well, and how do you present deals to your investors? Is it first come, first serves, or some sort of priority? Do they have to bid for the rates they're willing to lend at? Or tell me a little bit about how that works.
Yeah, it is first come, first serve. But what we do is when we get a new deal up, and we're probably putting up 2 deals a week on average now. Our goal by the next 6 months is really to increase that number tremendously. So investors do have a range of options. So each month we're trying to add at least 1 deal a week. So next month hopefully it'll be 3, and then 4, and then so on. So what we do each time once we get the deal page up, we'll send basically an email to all of our investors saying, hey, this new deal's up. Here are the highlights. Come and check it out for yourself. Yeah. And at that time, it's kind of a feeding frenzy because over the last few months, our deals have been not only getting funded within hours, they've also been oversubscribed at times. So investors are pretty upset when they're left out of a deal they thought was a great deal. What we've started to do is we do have a lot of repeat investors. The great thing about what we're doing is you can actually invest in real estate for as little as $1,000, in some cases $5,000. So that same guy that was otherwise going to have to put $50K in a deal can come on our site and do it across 10 deals. So they do want to invest in more than just one property. So for a lot of our repeat investors that have been with us since the beginning, we will preview some of the deals to them. So say, hey, look, we're putting this up at 10 a.m. tomorrow. We're giving you a first look. Check it out. So kind of how the process works.
So you determine, you break the investment needed into shares, and then but you don't restrict people from saying I'll do the whole deal myself.
Yeah.
But they may self-restrict because they don't want all their eggs in one basket per se.
That's right. Exactly. We don't have a maximum. We do have a minimum. We don't have a maximum. We've never had anyone take the whole deal, but we've had some investors come pretty close to it. So yeah, on average, our investors are probably putting in about $15,000 to $16,000 per deal.
Okay. And how are the rates determined?
We see ourselves as more of an intermediary than a bank or anything. So we're just trying to be operate a technology marketplace, and that marketplace happens to deal in real estate. So we don't try to dictate terms or anything, but what we do is when the sponsor first applies and says, hey, this is kind of what I want to pay in terms of interest or preferred return, we'll say, hey, that's probably work with our investors, or that probably will work. And so sometimes sponsors will come and say, what will work for your investors? What have you sold in the past? What have they been willing to take? And we'll say, this is the rate. And they'll say, okay, that works great. Or, hey, sorry, that's too expensive for me. Okay. Right now, there's really no science to it. We will be developing some proprietary technology probably in the future that will help us better determine rates.
Yeah.
But right now, it's really just what will the market accept, and that market happens to be a bunch of small individual investors. So,
So can you give an idea of what typical rates are? I'm just curious how it compares to private money, hard money, things like that, where you kind of lay in the spectrum.
yeah. So today, on average, and these are historical numbers, and definitely could change. Anywhere from 10 to 11% annualized is kind of the rates that we've been dealing with.
Okay.
In certain markets, if you're in the Southeast versus California, and core markets versus tertiary, secondary markets, the rates will change. So
Right.
it really depends on the risk, the how long the maturity is. If it's a 3-month maturity, your effective rate as a sponsor is only 4%. So if it's a 12% rate, or actually 3%. So it really depends on a lot of factors, but on average, that's kind of what we're seeing.
Okay. And how about like other expenses, origination points, and things like that?
Yeah, we do have an admin fee that we charge as a platform, and that's really we don't make money on that fee. It's really just a cost recovery fee. Because we do set these up as separate LLCs, we do have certain overhead costs per deal, and that could be anywhere from 2 to 2.5%.
Okay. Okay. And so let's talk a little bit about, so tell me again, if somebody is paying, I want to get to a little more detail about your model, your business model specifically, because I'm always interested in that. If a sponsor is paying, let's just say they're paying 10% to an investor, does that 10% pass all the way through the investor, or do you get a piece of that as well? Or
so because the upfront fee is merely a cost recovery fee, we do take a small spread. That's anywhere from a point to 2 points on the deal. So if we're charging the sponsor, let's say 10 or 11%, then the investor is really getting 8 or 9%.
Okay.
Yeah, so that's kind of how those are the two ways in which we really recoup any money or make money.
Okay.
One is the fee, which is potentially 2%. That's really to cover our costs, and then the back end fee gives us some sort of a profit.
Okay. And are there any costs to become a sponsor, to become an investor?
No, there's no cost there. So
Okay.
if you're successful in getting on the platform, the costs kick in. But if you're we tell you, sorry, hey, this didn't work today.
Right.
There's no charge.
Right. Right. And so for kind of interim financing, short-term financing, typically those rates tend to be higher than longer term buy and hold type investments. Does that hold true on your platform as well, would you say?
It depends. I think it depends on the deal, but in short, yeah.
Yeah, because 10 or 11% for a rental is pretty steep.
Yeah. But so here's another thing.
But not bad for interim money. So.
Well, another thing to keep in mind is a lot of our buy and hold properties, we don't structure as debt, structure as preferred equity. So we do give the option for investors to either come in as lenders and really get a secured position and an interest rate, and then get their money back in 6 months. Or we also give them the potential to come in and actually become owners of the property through a limited preferred equity structure. And in those cases, there's more of a preferred return structure. It could be 8 or 9%, and then there's a profit split after that. So like a waterfall structure. So it really depends on the investor and the risk and return appetites, as well as the sponsor and what they're willing to accept, because they may be able to get 5% debt on a 5-year deal, but they still need 20 to 30% equity. So we'll help them there as well.
Okay. So tell us a little bit about the business model for you. I mean, it's just some of that's just come out as to the ways that you make money. Where do you see? I mean, are there any other details in the short term? I'll talk a little bit about your kind of growth plans from here, but is that the primary structure of your business, is taking a spread on the fees and charging some origination fees?
Yeah, that's pretty much it right now at this stage of our company. I think, as you probably have figured out, we're definitely not becoming rich on any one deal. This whole business is a very long play where we're trying to build a very robust marketplace where
Right.
and the capital raising process becomes much more streamlined. So that's all going to depend on our volume. We're trying to get to a volume that's potentially 50, 100, 500 deals a month, not just 10 deals a month.
Right.
We're doing today. So, that's when we really start becoming a good business, and not only a good business in terms of actually generating revenue, but a good business in terms of, investors really loving to use our platform because they know they're going to be able to access deals in 10 to 20 different markets at any given time. And as we progress and as we grow, I'm sure there'll be other ways to monetize or even reduce fees because we'll be doing more volume. We're not really worried about making money right now. We're really worried about building a sustainable marketplace that
Sure.
that they can't wait to tell their uncle or aunt or cousin about because they earned an 8% or 9% annualized yield, really passively investing in real estate from the convenience of their laptop or tablet.
Right, right. And for one question I had about sponsors specifically, do they get rated on previous deals? So if they come back to give more credibility to their next deal, I mean, is that a part of your model as well?
We should hire you as a consultant, Mike.
Yeah. Hey.
No, we definitely will be doing historical kind of ratings, and right now we're probably too early in our marketplace lifetime to really do that.
Yeah.
But to that point, we've had repeat sponsors come
Sure.
on multiple deals, and 100% we're going to have some sort of way to see how they've done, what their
Right.
historical performance was on the platform and off the platform, right?
Mhm.
Both RealtyShares, and I'm sure they were raising money before RealtyShares, so there as well. And what we're working on next is we're going to put up probably in the next month is a stats page on our site where you can see how much we've raised, what markets, what the yield was, so that investors have a better idea of kind of what to expect when they come on our site before even creating an account.
Right.
We'll definitely be adding features that help investors not only determine is this deal good, but is ABC company the right fit for this deal?
Right, right. Yeah, I would suspect that as you get more robust, sponsors would get better rates in the future if they have a proven track record, and investors would probably be willing to accept a lower rate. So could benefit everybody. It's just a more secure deal.
Exactly.
Yeah. I mean, I found that with myself as I've moved through my business. I mean, I've bought almost 300 houses and lost money on 4 deals, and that's kind of unprecedented in the last 5 years. So.
You go. Exactly.
Yeah.
Familiarity, track record will help investors not only ease their kind of reservations, but also help sponsors get better rates.
Right, right. Awesome. So what have we not talked about yet about your platform?
I think we've covered a lot of it. I mean, I think it really comes down to how we're going to continue to build this marketplace. And one reason I love talking to you is I know you deal with a lot of sponsors, and you're helping them grow their businesses.
Yeah.
And kind of parallel, track here for us. We're helping these sponsors. It's kind of like you're their elementary and high school and we're their college. You're helping them start and get on their feet and really start doing this. And once they've gotten a track record, they come to us and can get hopefully a nice sustainable source of capital to continue doing it. So. Any sponsors out there listening that work with Mike, you definitely should visit our website, www.realtyshares.com. Check it out. And I encourage you to apply. We do have a very robust and conservative underwriting process, but if you're the right sponsor for the platform, we'd love to work with you.
Sounds great. Yeah, we'll definitely add links below the video here for folks to find you and help promote you as much as we can.
Mike is one thing, maybe this is because I was a lawyer before this, but I do think, the regulation is important because I think protecting investors is above all the most important thing in this business. Investors sometimes will come in and think an investment's a good deal, and really the curation process we create, the background checks, credit checks, but also the regulations that sometimes can go overboard, but at times are there to protect investors, I think are important as well. So, we kind of take pride in knowing that we do these vets and checks and really make sure that we're operating within the law. So, we encourage anyone else trying to do this to definitely stay within the confines of the regulations. And, but at the same time, we're also trying to create more access for both sponsors and investors. And we're happy to be one of the pioneers and very excited to be one of the pioneers in this space.
Yeah, it's definitely a really interesting, industry. I don't know if you call it industry yet, but money raising opportunity that I think everybody's got their eye on right now. So I did want to ask you with the fact that you have to set up legal entities and things like that. What is the typical turnaround time for closing a deal? And I know you've got the time to get it funded and things like that. A lot of investors, the way that I coach investors is to try to make sure that they have funding lined up, or a pretty good sense that they can get it lined up when they find a deal. It allows them to buy with more confidence, in all honesty. If they are making offers on houses and in the back of their mind worried about what am I going to do if I get it, that doesn't lend a lot of confidence. But in terms of turnaround times, what does that typically look like through you guys?
Yeah, it's a great question. We get that question a lot because real estate is a fleeting asset, and if you don't have the money, you lose it.
Right.
So right now, these are again estimates. Depending on the amount of the raise, we take about 3 to 5 days to do the vetting process. Once we do initial vet right when you apply, say, okay, this is going to work or not,
right,
on your resume. If we think the resume looks strong enough, then we will say, okay, bring us a deal. Let's conduct our vetting process. If we find any red flags during that vetting process, then it's obviously we don't proceed. But 3 to 5 days is really when we figure out, okay, if this looks good, let's proceed. And then after that, it could take anywhere from 5 to 10 days to actually fund the deal. We've funded deals in hours, but there's still lead time to get the capital together, to get it to escrow, to get the closing docs together. So I would say all in, you're looking at 10 to 21 days all in.
Okay.
It could be shorter and it could be longer depending on the size of the raise. I think one thing that will happen in the next 6 months is we'll get a lot more certainty on that, because right now, we're still young, and so to tell somebody you're definitely going to get the funds in 15 days is definitely a shot in the dark. So we try to give conservative estimates, and then hopefully under promise and over deliver. And over in the next 6 months to a year, we'll probably have better ideas there.
Okay. And one thing I forgot to ask about the repair draws. So is that something you fund at the time of closing, that the buyer would actually walk away with cash, or do you wait for them to request it somehow, or you get it all up front?
We'll fund a portion of it at close. So we don't hold it back. We will. So this goes back to what I was saying about the cross collateral. If there's cross collateral in place, we'll make it available immediately. If there's not cross collateral, then there will be cases where we may hold some of it back and make it available at the front end. Again, over time, we'll probably have a more kind of concrete way to do it. But right now, we're just basing it on the deal and who this borrower is.
Yeah, it's even with national lenders that I've known, it's tricky. They have to have a network of appraisers, a network of people that can go out and look for to make sure the work was done. They have to have a process in place to release it based on whether certain scopes of work are done. So, and generally, they're passing all those costs on to the investor, but it's still a lot of tasks to coordinate. So.
And that's kind of one of the reasons the cross collateral thing was appealing, was we rather just have additional security. And you as an investor, you probably don't want, as a sponsor, you would probably have more flexibility there as well. And we would release the collateral when the rehab's done, because we unfortunately have appraisers all over the country yet. So.
Yeah. Great. Well, hey, thanks for joining us on the show today.
Mike, it's a pleasure, and I was happy to be here.
Awesome. Hey, everybody. It's Nav Athwal with RealtyShares. They got some great things going on. Really exciting space right now, and we'll put the links below, but go to RealtyShares.com, learn more about what these guys are doing, and encourage you to obviously sign up, whether you want to be an investor or a sponsor. You have a deal that you need to get financed. I think in terms of being an option other than hard money, this sounds like it's definitely a lower rate. It's just a matter of whether, in terms of easy use and things like that. So it sounds like it's potentially a great opportunity for everybody involved. Awesome. Well, thanks, Nav.
Thanks so much, Mike.
All right. We'll see you soon. Bye-bye. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry, so get on over to FlipNerd.com.